Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today's Friday. Market has been closed for like an hour or so. So I am recording this after the market. And so market is closed. And so let's continue with our weekly analysis. As usual, let's start with the spider. Diamond, Qs, Russell, Semi, and the banks. And we'll call it a day. Hope you guys had a good week trading this week, and, navigating through the market and its volatility. And let's kind of follow up and see what we've been talking about. Last week we talked about this level here, right? We've been looking at this as a rising channel resistance. Yes, I get it. This is not. We covered this last week or last several weeks. In fact, that this is not a textbook channel because of this, but I look at it this way to see that I think this was meant to be a channel. The market decided that it was gonna fake a lot of people out, make sure the weekends are gone, make sure 90% retail traders are not in it, right? Let them work on their quote-unquote big short, let them be fearful, wait for market crash like they did in 2016, right? Market got right back up here. S&P is actually up 19% year to date, actually 29%, almost 30% here since the December lows. So it's made a lot of progress. Not only it regained all of its losses, and it has cultivated new all-time highs there. So last week, we talked about that, rising pivot, rising channel resistance. That's the level, and that's an obvious level. And if you've been following me on my videos and YouTube, when things are so obvious, when everybody's talking about the same thing, market has its way of surprising, shocking the majority. So keep that in mind. Last week though, I gave you 298, 296, right? So we came down and there was that gap. We filled that gap yesterday, and initially we saw a dip buyers coming in, and that's what we saw, that green candle towards the end of the day yesterday. We gapped up initially today, and then we saw sell-off towards the end of this day. So now the gap has been closed. Initially, we did see a support there after the gap was filled, but it looks like we're retesting that area. So I'm going to get rid of that, and let's do a little bit of maintenance here. Let's do it together. And so going to get rid of that as well. First, let's talk about that 20 MA. That 20 MA is actually setting at high. So I tighten it a little bit to accommodate that, to accommodate this. So that's the 20, that's the 50, and that's 100. So now the next level, last time it looks like you can see right here, this looked like also that we may break below it right on that 20. It looks like you want to continue lower to maybe retest that 50 at 287. We ended up gapping up, going higher. So we're right on that 20, so we may or may not bounce from here, but you guys know that I don't care about what's going to happen on Monday and Tuesday. So we may bounce at 20, we may lose it, but if we do lose it, I think likely going to come back down to 295. There's a gap here, so that's going to be the gap area once retest, right? So the gap either gets filled or not filled. That area, right, 295, 293 at level is going to act as support. We got another small gap here, which is at 292, 291. We got another gap here, 289. That's a lot of gaps here. So that's not a good look for the bears, right? Not only that, we got the 50 MA hanging around here, we got the 100 SMA hanging around there. So, and gotta go through all these gaps here. So I think at this point, you probably roam around social media and stuff like that. A lot of people are talking about this as potentially a triple top, and this triple top is going to dismantle the whole thing, and this is going to go to nothing, right? Well, those people, obviously, now learn to ignore those people. I think it's not going to be as important as what it seems to be. I'm not even surprised if I don't watch CNBC, so if you see a chart master bring this out as a triple top, please send it in my way so I can kind of watch it and have a little bit of entertainment through that. But so I don't think that triple top isn't gonna be as important as what most people perceive it as. I think what's gonna happen is 295, 289. This is gonna act as pretty strong support. Pretty strong support. I think the worst case, maybe we come down to 286s, 285. If it comes 286, 285, I think that's a good level to buy the dip for position trading purposes. But anywhere in this vicinity though, 295, 280, I think it's going to be pretty solid support there. A lot of gaps here. We've got 50 MA there. And so that's kind of what I'm thinking. But next level support, 295 level to watch. Let's go to Diamond. Diamond's actually, when you actually think about Diamond, I'm actually going to line chart on the Diamond. So when you go to Diamond line chart, I can tighten this a little bit like that. You can see right there, right here. And then go back to the candles. And you can see, I'm going to get rid of that for now. And then what I'm going to do, I'm actually going to connect this one to this one like that. So I think that's a better rising pivot because it connects here, it connects there, here, here, and here, right? So you can see actually Diamond, as far as like a chart, price action is concerned, it looks most bullish because we initially broke above it and we broke above this. So we initially broke above all these rising pivots and we actually pulling back to retest it. So it could potentially be, resistance, potentially new support before going higher. So if we see Diamond start seeing some strength next week, that could potentially lead other indices to find some traction there to the upside. We got 20 MA, still has not even yet retested. Right on the S&P, we're right on that 20. Well, on the Dow, 20 is right there, slightly below it, right? 50 is there. So I think Diamond looks most bullish out of all the other indices. Let's go to Qs. Qs, we hitting that level, that rising channel resistance low. We slightly got above it. Let's do something like that. And so last week I gave you guys that level, so similar look to S&P. That was that gap, so I gave you 191, 190, right? So initially came down to 190, filled that gap, which is coinciding with that 20 EMAs. That 20 EMAs acting as support quite some time. Actually, that's a little bit concerning when you see the 20s getting respected several times here. So sooner or later, when so many short-term traders rely on that 20 EMA, well, market want to make sure we break below that, create a little bit of, panic. So I won't be surprised if we don't see a bounce here again and make new highs above this rising pivot there. Then we're probably gonna, even if we bounce and if it's a weak bounce, if we come back down, 188, 189. Again though, there are a lot of gaps. There's a gap here, there's gap here, there's gap here. There's actually small gap here that I didn't put in, like a little tiny gap here. See that? Gap here, gap there. There's so many gaps for the bears plow through. We got the 50 MA there, 100 SMA just hoovering that gap. It's, again, I don't think just because we're on that potentially, it's not going to be, that resistance not going to be enough. Sooner or later, we're probably going to pause. We might even, move sideways. We're going to break below it sooner or later and start to thrive. And so, we're going to get into a slow season. I'm not surprised by that, given the fact that this thing just did this. Well, I'm not surprised to see some slow months here, right? But I think these gaps are going to provide pretty solid support. Let's go to Russell 2000. Russell 2000 has been just grinding, not much a movement. But I think sooner or later, once we see the large indices start going, I think Russell 2000 is finally going to get back above it and break above that It's what I call neckline channel, and start hitting that new all-time highs as well. So, but we're kind of just coiling there. Semis. Well, semis doing well. We talked about this, right? This went straight up. We needed that intermediate term higher low. We came down to that 50% level. Coinciding with the 200 SMA area. We cultivated higher low, filled that gap entirely. That's a good thing. All we need to see is start making new highs there. But technically, we made new high. What does that mean? It's a higher high. What is the definition of downtrend? Lower highs and lower lows. What does this look like? Well, that looks like higher high, man. Let's go to the banks. Banks is technically the weakest link out of all the indices we analyze every week. Is because technically we're still in the intermediate term downtrend. It needs to get above 2080.97, which I think it will. I think banks and the small caps really need to play some catch up, and I think that's what. Again, it's gonna be. I think once we get out of this slow season, which we're gonna start we've been getting into, it's gonna be the banks. It's gonna be the Russell. It's gonna push the indices much higher. Sooner or later, you're gonna see the banks moving so fast and start getting start playing catch up there. But we got a little gap here. Last week I gave you that level, so let's do that. We partially filled that. We got a little rising resistance there, so we got that gap. Let's see if that level holds. It's been faithfully cultivating higher lows here. You know what I could do? And just draw maybe that level too. You know, that level there, in case this can start falling over. But we got gap here too. So I'm gonna give you a little bit wider range this time, just in case some shenanigans start coming down. Don't worry about the support, because sometimes market like to come break below it, and so before going higher. So don't worry too much about that. It's just these supports and resistance there as a reference point, not like a precise pinpoint where it's below it is bearish, above it is bullish. Not like that. So that's really for me. Market hasn't really changed much since last update. My long-term analysis still intact. I'm standing on it. I'm not closing any of my longs. I'm holding full, and market is gonna, I think, have a great year this year. But we're getting into a slow season, and some of these short-term levels, a moving average and the gap here is gonna give you some kind of a cushion should the price continue to decline early next week. So, well, you guys have a wonderful weekend, and good luck trading next week.